All right. Hello, my name is Nina. I'm a nurse practitioner and I do day trading futures. I trade pretty much every day if the market presents an opportunity. I use one simple strategy, a very simple, easy, super easy, simple strategy. I've been using it consistently for 6 months. It has gotten me payouts, it has gotten me money in my pocket, it's gotten me great results, period. I've been able to make money consistently off of it, and it's still simple. It's the one strategy that I use, and I wanted to create this video so I could share it actually. So for starters, I use TradingView. I don't know what others use. I know that there's TC2000, which is if you do stocks and things like that, that's a pretty good one. TradingView is extremely popular. I think it's like 14 bucks a month. You get a free trial. This is what I use to see the charts. You have to see what you're looking at, how price is moving. You do all your drawings with your whatevers, your tools to understand. Because before I started trading, I honestly thought it was just guessing. Hey, I'm taking a risk. Let's see if it works out in my favor. And if it doesn't, well, darn. And if it does, oh, yay. And I literally thought it was just a guessing game. Once I started getting into it, I realized it's an actual strategy. There are steps that you take, and there are multiple different types of steps. Everybody has their own way of getting in and out of the charts. And so you need to have a platform like this in order to trade and see where price is moving so you know how to get in. And then you either have a broker where you put your own money into that broker, almost like a bank, and you use that money to trade and either make some, lose some. You put more money in and all this kind of stuff. You can take your money out or your profits out. Rah, rah, rah. For this specific or particular video, I'm going to talk mainly about what I do because trading is multiple different styles. You can trade Forex, options, futures. I specifically trade futures. For those of you who are familiar with it, I used to do options, but the whole theta, delta, those calculations, calculating spread, concern about slippage, and really, I used Webull to do my options trading, and the flipping back and forth between the different screens on my phone when I traded Webull was just not like I didn't feel like I was keeping up with things fast enough. I feel like I was always behind once I entered in to a trade because Webull looks better, or it's a lot easier for me to enter into a trade on my phone versus the computer. So I just stuck to my phone and I still didn't. Yeah. And then again, when it comes to all the spread and whatever, I'm always confused about what that means and blah, blah, blah. So, needless to say, when I realized what futures was and I heard about prop firms, I was like, yeah, I'm interested to know. So, I trade futures and let's see, futures, which is a type of, you can either do futures, options, or Forex, and I trade futures, and I specifically use prop firm. So prop firm is like if you understand using a loan or a bank and using borrowed money to trade, and then that's basically the same thing, except we're not going through a bank and a credit score is not being adjusted or checked, and I'm keeping some profits that I make from it. So I'm using someone else's money to trade and I get to keep some of the money. That's pretty much it. There's no like other secret about it other than in order to use somebody else's money to trade, because you need leverage, you have to pass stages in order to do so. So someone's going to say, well, why don't you just use your own money? Like, why go through this whole process? The thing with trading is that you have to have some sort of income or some sort of money to go in. You cannot go into trading for free. It doesn't work that way realistically. You either use your own capital, which is what I did with options, and you can use as low as $100. Same thing with Forex. You can enter into the Forex market with as low as $100. I've done it. I've seen it done several times, and start growing your account and making money from day one, day zero, really. But futures is kind of special, and now Forex does this too, where you use a prop firm. So I can either use my own money, or I can use someone else's money that's leveraged, just a bit higher, and make money that way. So futures compared to options, in my experience, when I enter into a trade on futures and I enter into the same trade, same instrument with the same risk, with the same amount on both, my return, my risk to reward, and the profit margin that I receive back is higher on futures. And then futures allows me, so futures, I have higher return, and I can also trade at night. Open market at night. So because I work night shift as an NP, this really spoke to me because at night you're looking at Asian market and London market. So I was like, yeah, this could work because then, hey, I'm tired in the morning. So if I don't feel strong enough in the morning, I don't have to worry about the New York market. I can trade in the London or the Asian and still make money and things like that. So that's what I had learned. And that's what made me decide, okay, futures is going to make sense. I can work nights. I can trade at night. I can sleep during the day. And I can use someone else's money and trade without my credit score being touched. And it's very simple. So when I was introduced to this, actually my sister um, introduced me to this, and when she did, I was like, okay, this is an interesting idea. At first, I wanted to just focus on using my own money. So, like I said, with futures, you do have a higher return, and since you have a higher return, that means if you're going to use your own money, you're going to have to use a higher amount. So, unlike forex and options, when you can trade with $100 or $200, with futures, the minimum that you could trade with using your own money was 2K. Did I have 2K? Yeah, I had 2K to use. It's not a big deal. I could save and work enough shifts and say, hey, I've got 2K. And that's what I did because I was like, I don't want to use someone else's money. I don't want to go through that process. And well, I did actually. I ended up realistically doing the prop firm and spending the $50 that it cost to use someone else's account. But when you don't follow the rules or you break the rules or trade doesn't go in your favor, the account gets closed and then you've got to pay another $50. So I was doing that a lot. I was blowing those prop firm accounts. And so I was like, you know what? I'm frustrated. Let's just go back to the basics. Let's just use our own money, $2,000, and start. Because I did the calculation based on my entry and I went through Webull. And so I put my 2K in and I started trading. And I realized that my profit return wasn't much because I couldn't use minis. I couldn't use the instruments that I wanted to. I had to use the smaller instruments like the micro because again, the 2000 wasn't much. If I really wanted to see a huge move with money, then I would have had to do something. I would have had to go like 10K, or I would have to have done like 25K. Now you're trading with 25K, 10K. Yeah, you're going to see big moves. And in my mind, I was like, I don't know if I really want to do I don't know if I really want to start with 10K because I'd already started on this trading journey where I was using $100, $200. At one point, when I did do options trading, I actually started with $2,000 to trade. And so I'd already put $2,000 to trade with options, and I wasn't super successful with it because I didn't understand the spread and all this kind of stuff. So I was like, 2K is all that I'm comfortable risking again of my own money, of my own capital into a trade or into a broker. But the 2K, I wasn't yielding much. I was probably returning back like $40, $30 each trade. And I was like, that is just nuts. And of course, I would have got more return had I put in a bigger leverage like 25. That would have made more sense. But I wasn't willing to do that. I wasn't willing to go above 2K. So I went back to prop firm. And this time I told myself I have to do prop firms the right way to benefit from it because it's really a no-brainer. You put a little bit of money in, you get a huge amount of leverage to trade with. You get 90% back of the profits if you follow the right steps in getting evaluated and passing your evaluation. And as long as you have a functioning strategy and you're consistent, this actually works in your favor. So that's what I started doing. I started becoming really consistent with the strategy that I was using. And soon enough, I was able to pass accounts that I was blowing, honestly, in 24 hours, in 2-3 days, in a week, what have you. I was able to pass funded accounts in a matter of 2 days, 3 days, under 1 week. It really did not take any more time for me. And because I had this one simple strategy that I was using, it worked really well. And so that's what I'm going to share right now. So I use prop firm, and there are different companies out there. What I used is TopStep. TopStep works really great. Now, there are other ones you've heard of, different companies, Alpha Capital, I think it's called TPT. I mean, there's like a whole bunch. You just Google a bunch of prop firms. There are all these different companies with their goal of the same thing. They provide you enough leverage and capital to trade with. You have to pass certain levels, and then everything that you make after that becomes your profit, becomes what you keep pretty much. And so I have stuck with Top Step because this is what my sister introduced me to. I'm definitely a creature of habit. If I find something I like, I stick with it. And once I figured out Top Step's rules and how to do it, I was like, okay, I'm set. And that's exactly what happened. So when I go to Top Step, what I would do is go to earn funding because you need funding to trade. Oh, Lord, now they're not working. So basically, Top Step, it is New Year's Eve that I'm deciding to do this video with, but that's cool. I've done this before. I have a previous video where I share what I do, but here we go. So when you log in and you decide you want to trade and you want to use prop firm, which I highly recommend it for anybody that's new to trading, new to prop firms, what have you, I would recommend using funded accounts. You will get a buying power or a leverage of either 50K, 100K, or 150K, depending on which stack you're interested in. I always went for 50K. I've definitely done bigger ones, but this is where I would start because I paid just 49 bucks. That was my thing. So I would select it, and basically what all of this is saying is that you have to make $3,000 in order for this 50,000 to become what you trade with. You cannot lose more than 2,000 the entire time. It's not like you can't lose more than 2,000 in a day or 2,000 a week. You can't lose more than 2,000 period. You can't enter into more than 5 contracts, meaning how many positions do you put yourself in order to get money back? You can't enter into more than 5 contracts. And when you pass, let's say you do make this 3,000 and you didn't lose more than 2,000 during the whole time, and it tells you, hey, you've passed, you have to pay $129 to activate this account so you can start trading with this leverage. Very simple. Now they have this new thing where you do the same thing as I said. You have to make 3,000. You can't lose 2,000. You only traded five contracts at max. But instead of paying the $49, you do 89 bucks because you no longer have to do an activation fee. That's the new thing that they're doing. But the standard, the basic, the simplest, the cheapest, 49 bucks. And you can compare this to other companies. Like I said, I've looked at others. I've used other prop firms. I've always found myself back at Top Step because it's easiest for me to understand. It's the first one that I started with. And if I think about it, I think compared to the ones that I have tried, it's the one that has the 49. There's some that do 49 a month, but there are others that do 79. Now you see that it says 49 a month, which means you have 30 days to basically meet this goal. Otherwise, you get charged another 49 for the next month until you've met this goal. Because once you've met this goal, then this 49 a month does not apply. And as I said, I've passed funded accounts in 2 days. So this doesn't really become an issue as long as you're using a strategy that's proven and that works. So let's say you register with this, 49 bucks, you're good to go. Then you want to have trading view. Trading view is important. This is where you see your charts. You need to be able to see what you're charting, what your price is doing. And you need to be able to use your markings and draw on things and figure out what you want to do in order to know how you're going to move. Because if you're new to trading, you may have thought like me that trading was just gambling, guessing, which people do treat it like that. But then again, people treat life like gambling and guessing. So it's about the same thing in every aspect. And I thought, well, I'm just going to have to guess and figure it out. No, when I got into trading, day trading, September 2024, my sister shared like, no, there's an actual strategy. Like you don't go in blind guessing and just, oh, let's see. Absolutely not. People who are profitable, who are full timers with this, who actually make true money, who live off of it, who teach other people, who have courses, they have a whole step 1, step 2, step 3, step 4 sort of plan. And so you want to use TradingView in order to do your marking so you can follow your steps in order to enter into a trade properly and profit from it. Now, this is New Year's Eve, so I don't know if it's going to show the dashboard. Right now it's saying it doesn't show the dashboard. So now it's saying there's a network error, which sucks. But I do have a whole video on prop firms that I will upload onto YouTube at some point, but I just wanted to share my actual strategy. So this is what I do for my strategy, and I'm going to make a list here. Call it strategy for anybody that wants to take notes. First step is I'm going to look to capital. Look at Forex. Look at news. Look at news. So before I enter into a trade for the day, I look at the Forex Factory. This is a free website, forexfactory.com, to look at what the news is saying for today. I look for red folders. I look for the time the red folders are going to happen. I set this system into Eastern time. You can see here this is Eastern, but I'm Central. Because that's what New York Stock Exchange, I want to be aligned with that time frame. So I look to see when news is taking place. And I look for red folders to avoid trying to trade on those times, because red folders mean aggressive movement in the price, because things are happening that could move and shift price in a direction. Regardless of what your strategy could be, this could completely derail that strategy, and they could end up putting you could end up losing a lot more than you expected. Sometimes you can end up winning, but it's not ideal if you're a profitable trader who's consistent to enter into a trade when during this time period when this happens. What you do is you wait for this event, this news, this announcement to take place, the results, the actual results of whatever comes from that, and then you enter into your trade after that, maybe 20, 30 minutes after, when the market has now settled, if that makes sense. It's just like people who shop on Black Friday. I don't even know if people still physically wait in the lines at Walmart again, but you know how like people will wait and enter into that stampede. Well, you don't want to wait. You don't want to enter into that stampede. You want to wait and let levels kind of regulate and get stable, and then you enter. That's what these are. Specifically, I look at the red folder. So when I saw this 8:30 red folder, I knew not to trade at that period. So I checked that off. Then the second thing is I mark my sessions. So in the market, I wrote here that there's Asian market, there's London market, and there's New York market. We all know this, New York Stock Exchange. So there's actually 4 main sessions. There's Asian session, London session, New York session, and there is Australian, but no one really uses the Australian session all that much. What I do is I demarcate those sessions. So I know that, actually before I write it, so I know that Asian session is, I mark it as like 6 p.m. to 3 a.m. Then I know London is 3 a.m. to 11 a.m. And I know that New York is about 9:30 a.m. to 4. I'm going to say 4 a.m. 3:30 if you are not doing like ES or NQ. 4 makes sense. Anyways, 4, I say 4 a.m., 4 p.m. All right, so these are the sessions. So on my little chart here, I will mark these sessions out. And specifically with the, I don't know, is there a way to move this? Maybe there isn't. Oh, that's sad. Okay, and then there is a pre-market here. 8:30 before I enter into 9:30 market. So I'm going to mark Asian session starts at 6 p.m. So I'm going to go on here and mark 1800. 18. Oh, yeah. Let's go down to the 30-minute. Okay, so on TradingView, which I have a video about understanding how TradingView operates, you can look at these lines specifically. These are all called candlesticks, because I guess when you zoom out or so, it looks like a candle with a wick. I really don't, I mean, whatever. So these are considered candlesticks. Each candlestick represents a movement in time. So each candlestick is either 1 minute long, meaning 60 seconds, is either an hour long of price moving up and down until it finally closes at a certain point. And so these are the list of prices here on the side. And these candles, you can tell they moved in certain prices and closed at a certain point. And then the next minute or hour or however long you're looking at the price will determine where price opens, where it closes, the highest point, which is this highest wick, the lowest point, and this lowest wick. And I'm creating a full course where everything is extremely detailed. I just wanted to give a quick, because some people just want to see a quick like understanding of it before detailed stuff is out. So that's what this is. So when I look on the top left corner here, these are the times that the candles represent. Right now it's representing a 30-minute candle, meaning each of these sticks, green, gray, gray, green, green, gray, each of them are 30 minutes long. And so when I'm looking at my sessions and I want to draw my lines, I go down to the 30-minute and I mark my sessions. So I'm going to mark my 1800 session here with this. And these tools are along this side. I put my favorites up here so I can constantly use them. I'm going to mark 3 a.m. for the start of the London session. I'm going to mark 8:30 for the start of the pre-market, and I'm going to mark 9:30 for the start of the actual New York session. This is literally how I do it. I don't color code any of these because I'm aware that these are what the times are. So this is 1800 or 6 p.m. Asian session. Then this is 3 a.m. London session. Then this is 8:30, which is pre-market session. And this is pre-market. This is 9:30. This is a New York session. And then I mark 10:30 because that's usually when I get out. Because between 9:30 to 10:30, that's when I look for an opportunity to enter into a trade. Does it happen every day? No. But this is the time period where volume is pretty good. They call it macros. So the time, the volume, the momentum, price moves really well. It doesn't just stagger. It moves pretty aggressively during this time period. And so I mark those time periods as that's when I trade. And after that, I tend to get out for the most part. All right. Now that I've marked my sessions, the next thing I do is I mark highs and lows. I look for the highest points of price and I look for the lowest points of price. So I typically will look at this on a 5-minute and a 30-minute time frame. So right now we're in a 30-minute time frame. So I'll take one of my little marks here and I'm looking for where there's a green and a gray that shows price moved up, moved down. And this is that point right there. And it's the highest one. Now you can see this green and this gray, but this green is from a previous session. I'm looking for the price to move within this session of Asia. I'm looking for the highest and the lowest. So right now I have a green and a gray, which means an up and a down, because the green means price was moving upward and the gray means price was moving down. And I look for the highest point between those two and I put my line there. And I go here and I make it red because it reminds me that this is Asian high session. Then I click another lever here and I look for where gray goes down, green goes up, look for the lowest point for that, and I make that my lowest point. Red, highest session, lowest session. Now I do the same thing for London. I look for highest session, let's see, is this here? Highest session, because my first move is in this time frame, I'll leave it there. My lowest session is this gray and a green, and I put it here. And I'm going to change the colors and make it blue so that I can distinguish it from the Asian session. All right. Okay. And then I always do this like this for whatever reason. I was focused on the Asian and London session. I forget that I should probably look at the previous day because I want to look to see what price did previously too. All you're doing is like being like almost like a technician, like a data analyst. You're looking to see how things moved to predict where it's going to move again. And for this session, I make it a dark black and I thicken the line. So this is the highest price was during yesterday's time period, and I put this line at 9:30 to say, hey, from 9:30 to 6, this is the highest New York session was, and then from 9:36, this was the lowest session was. Cool. So I marked those sessions, and then I'm done. I'm done doing my demarcations and looking for stuff. Now my next step is mark highs and lows on sessions. Now my next step is to look for draws on liquidity. So basically I'm looking for where price would like to, oh there it goes, where price would like to visit. And I like to go on the 4-hour. When I'm looking at the 4-hour, meaning each candle represents 4 hours worth of data, I'm looking to see what price did in each of these time frames, and I'm looking to see, oh Lord, there we go. I'm looking to see where price would want to shift to. So what you're looking for are these, what some call swing low, swing high, where there's a significant high peak point and a drop, or a significant low point and a rise up. And I put in my marks there on the 4 hour. The 4 hour gives me a bigger view, and it tells me on a higher time frame, because it's like if you ever watched A Bug's Life, or was it Ant's Life, whatever. From their perspective, right, when an ant is really tiny, its world is very small. But if you're a human, the world is a lot bigger. You can look at it from a bigger point of view. That's how I look at it with price. It's cool to break down and look at everything in a 1 minute movement, but you're not really getting the big world movement of price. You're just getting price moving at 1 minute. But if I look at price on the monthly, which M is for month, and I look, oh wow, look at price. For the whole month, it's been moving in this big move. But if you look at the 1 minute or the 5 minute, oh Lord, it's going to tell me it doesn't know what I'm looking for. Nope. Let's refresh. Maybe I moved too much. Okay. If I break price down to the 1 minute, then you're only looking at 1 minute moves, and which is a smaller. So in the 1 minute move, it looks like price is going down. But if I look at price on the daily, price is clearly in upward. Now I've had this big downward move, but if you're looking at the overall picture of a price, you want to look at the overall direction. Overall direction has been going up. But if I zoom in to a 5 minute, I might see a change in direction and movement in a smaller way. So if I want to look to see where price wants to go to, where it wants to gravitate to, I talk a lot about how price is like a magnet. That's what I look at it as. It pulls into a certain area, and I look for it to pull into areas where I've seen there's a significant drop in price or a significant peak in price, and then a change in direction, pretty much. So I see that price has gone down, and then now it's going up. I put mark here. I put mark here too, but this is more of a significant draw on this 4 hour. And then I look to see other ones. I see a draw here. That's a significant one. And I see a peak here and a peak here, but because price has already come back into these spaces, price won't come back to that. It's going to target new ones. And so what you're looking for is price. This candle represents where price is right now. This red line here represents where price is. Price is going to want to magnetize to these, possibly come down here where these prices have not yet been drawn on, where liquidity has not yet been drawn on. So I put my marks there and tell myself, you know what, price may want to come all the way down here before it goes back up, because in the bigger, scales, it's actually moving in an upward direction. But on the smaller scale, it may drop down, it may consolidate before it starts going back up. So I draw these lines to tell me that price may want to gravitate to these points. So look for draws on liquidity. Pretty simple. And then now I go down to the 5 minute. I go down to the 1 hour. So I should have put on here. This is, yeah. Draws on liquidity on 4 hour and 1 hour. Perfect. So now I'm on the 1 hour, and I'm looking for those same similar draws again. Like this would be great where I see a price go down and have this nice massive move up. But the reason why I wouldn't choose this is because price is already, you see how if I draw a line here, I can see that price has already come down and taken out this part. So this no longer is valid to me. Okay, so draws on liquidity. I'm looking for parts where price could potentially gravitate to. These are some parts here. So overall, we did this on the 4 hour. Now I do it on the hourly. And I look for prices being drawn to the downside. And I look for prices to be drawn to the upside. And I see here. And to me, the upside is a green candle going up and a gray candle going down, the highest of those 2 points. Okay, so I can see price coming down and taking out these lines here, coming down, taking out these lines here, and I can see it reversing upward and taking these lines out up here. Okay, cool. So draws in session, draws on liquidity have been placed. We have marked our Asian session, London session, New York session, and I do trade the New York session. Now I work nights, and so when I first started futures, I was kind of looking more at London session, looking at the New York session, London session and Asian session. But I realized quickly that I prefer the New York session because I like the volatility of it. So I'm willing to stay up a couple hours to trade. That's what works for me. Going through the London session, it's fine, but I do believe that the London session doesn't move with the same amount of movement. Now, I can still trade the London session, but usually I'm busy doing something because at the end of the day, I'm at work. But I do love looking at the charts at night, marking, kind of predicting, doing my own like analysis and figuring out where I think price is going to be or how much it's going to move for the day. So I've done my hourly, I've done my 4, I've done my sessions. Now I drop down to the 5 minute. On the 5 minute, so let's see. I never use this replay button enough. Let's see, this is, oh, okay, this is the session. So I'm going to try to show you how I think and what strategy I'm using to enter into this trade. So again, just for reference, this is the Asian session. This is the London session. Now we've entered into pre-market, which is at 8:30. So what I do is I look for price essentially to interact with previous sessions. So this is the Asian session. I'm looking for this price to interact with this London session. And so I see price once London session kicks in, price from Asian market or Asian session is over, and now I see price coming down. We've marked lowest price for Asia session here, and we've marked highest price for Asian session up here. So when I look, I see that price has come down, and now in London session, the price has gotten lower than the Asian session. Okay. So since price has gotten lower than the Asian session, and it makes its own new low, I expect price to reverse because price is magnetized to itself. Price comes down here and it's going to look for itself at a closer angle. Like it's not going to try and look for price. It's not going to be magnetized to price as much all the way over here because look at this huge space versus itself up here. It's going to try and find where price is a little bit closer realistically. So zoom out here. So in this session here of, where are we? Oh yeah, this is Asian session. Okay. So in this Asian session, oh Lord, stay on the page. That's interesting. Okay. Price has gone down, taken out what they call taken out this price and created a new low and gone up. The same way I was marking price with these lines and showing where draws on liquidity are, where price kind of gives you a fake out. It goes really low, but then it turns direction sharply and has this robust move upward. This is where that happened. If you traded London session, you'd use the technique and enter into a session here in London, but I actually entered into it in the New York session. So because price reversed in this London session and went up, I expected price to continue because this is a manipulation. Price has now taken out the previous low and has said I can make a lower price and I can grab whatever low prices are up here as a discount and buy upward. So when it does that, then to me, it has enough momentum to continue going. So this is a previous session manipulation. It manipulated the previous session and it reversed. So I expect the new session to be a continuation of that. And in the pre-market, you see that because now it's pre-market 8:30. This London session has been going upward. So the pre-market continues to go up with it as well, which is fantastic. So main session hits at this time, 9:30. And so when it does, I'm ready. My bias is that we're going to keep going up. Previous session was manipulated and reversed. So now I expect a continuation in the new session. So I press play and I wait to see the continuation. Now I get this move, aggressive move downward, and I'm like, okay, so maybe we don't want to continue upward, and which is okay, because this also, when price crosses over this line, this is a key level, which is the Asian high that we had. Anytime price comes towards or closes above a key level like this, you can expect price to want to come back and address it, especially when the New York market opens and um, this volume is huge. So for me, I was like, okay, I still feel like we're going to move in the upward direction, but maybe price is saying we'll do that later. Right now, I'm gravitating and grabbing all these lower prices downward. So when this happens, I use two strategies. Or I use one strategy, but I use it in two steps. Let me see where my little notes are. All right. Okay, so I looked for draws on liquidity. Then I look for bias. Look for bias, which I said, well, I'm going to expect price to move up. Let's see. Up or down. And that's the only direction I'm looking to trade. I'm not looking to trade price moving in a sideways move, because that's not a movement that benefits me. I'm looking for price to either want to go up or price to want to go down. Because price manipulated up here, I expected price to want to keep going up. But then at the same time, you've got to flow with the price. When I see price took out this Asia high, I knew it would probably want to reverse back. So I'm prepared for both. I'm prepared for the price to want to go up. I'm prepared for the price to want to go down. It's a matter of seeing my confirmations and knowing what direction I'm going to go. So now I see prices in this big dump down. And I say big dump because it's a huge candle. It's not just a small candle. It's a really large candle that I saw. So can I drop down here and still see my notes? Probably not. Okay. So the next thing I do is I draw a fair value gap. So a fair value gap is where I see a gap that is created between the first and the third candle. So if I zoom in here properly, I can draw this, take a rectangle, and between the end of this candle, which is the wick, to the end of this third candle. So this candle is 1, this candle is 2, this candle is 3. I see this gap here. This is a fair value gap. I also see a fair value gap here. Cool. What I'm seeing is that these gaps are being formed as price is moving down. Again, price is gravitated to itself, but price also likes discounts. So if price wants to keep going down, that's cool. It needs to come up and get a discount, meaning I need to see it tap back into this space before it goes down. So now that I see that the gap has been formed from the 5-minute, all right, let me go back on the 1 hour and write this in my notes in case anyone is writing this down. 6, look, so here we go. 5-minute candle. So I'm going to be on the 5-minute candle looking for bias. And then I'm going to 5-minute candle, look for fair value gap. That's the abbreviation. And then on the 7, go down to the 1 minute, look for sniper entry. All right. So just remember that 5-minute candle, we look for fair value gap, which we did. Now we're going to go down to the 1 minute and look for entry. So 5-minute gap, fair value gap was formed here, because we're going to flow with the market. If the market wants to go up, it's going to go up, but it may not go up right now. And I have a window in which I trade. So if market wants to go up here, it should. Market's going to do whatever it wants to do. I'm just here along for the ride. So the ride right now is letting me know that it wants to go in this direction. So now that a fair value gap has been created, I go down to the 1 minute. I skip the 2 and the 3. I usually look at these sometimes, but not as much as I look at the 1 minute. Okay. Where is price? I guess it's a holiday. I'm doing too much. I should probably just have waited to a normal day, but this was the time that I have before I start work. This is what made sense. for my schedule. Actually, I think my whole internet is frozen. Yep. I think the internet is frozen. For some reason, I'm not connected, which is wild. Technical difficulties on Christmas Eve, y'all. Let's see. Okay. Are we reconnecting? I hope so, because we're almost done. All right. Okay. Wait, where are we? Oh, okay. Cool. Oh, I tried to do this replay thing where I just showed up to here. Yeah. That's the cool thing about fair value gap, about trading view. If you want to analyze the strategy that you're using, you could use this replay button that acts like if the price, if this has already happened, obviously. But if you want to go back and like test things, you can use this. I don't really use it because I just don't. So fair value gap was formed here on the 5-minute. Fair value gap was formed. Oh, yes, I should. Oops. All right, formed here. Oops. Yeah. So now I drop down to the 1 minute. Dropping down to the 1 minute. And I see on the 1 minute, so I didn't catch it up here because now each candle moves in 1 minute. I could have entered into the price here, but I believe I entered here actually. So fair value gap was formed, and now I look for a candle to go into this space and close out. So I've mentioned the green candles, which I've done in detail somewhere else, I think. Green candles open down and close upward. This little tick that you see here is the lowest the price ever went. And this tiny tick here is where it's the highest price ever went, and then it finally closed. So this green body is where price truly stayed. Price opened up here, got as high as this, got as low as this, bounced around, ended up closing up here. So the price closed in this box. That's not what I want. I do love that price got in here because that's the whole thing. I want price to show me that it recognizes this gap. It acknowledges it by goes back in, but then gives me the direction to say it's still going back down. So this candle does just that. This candle opens up here because it's a downward candle, a bearish candle, a sell candle, a puts candle, whatever you want to call it. It's going down. It opens up here. Price gets as high as this, gets as low as this little one, bounces around and ends up closing. So this candle closed outside of this gap. This whole gray box, the candle sticks out here. Once this candle does that, in the 1 minute that it takes for this candle to form, the next candle that's going to take place, I have, where is my little instrument? Oh, here we go. Okay. I have taken my little tool and I have placed it just here and said I'm expecting my price to go back to its next target, which will be this draw on liquidity, this Asian low. And I'm going to go on top step, which it doesn't show you right now. I wonder if I can, despite the holiday. Let's see. Oh, good. Now I'm going to enter, I look at that chart and I go, this is S&P 500. For futures, it's called ES. So I'm going to go on my top step where I've already opened up activated my 50K account, and now I'm doing a funded account. I'm going to go on the platform, wherever it is. Lord, I think I opened up too many things. And I'm going to select ES. And let's reset this chart. Yeah. I'm going to go to the same spot where this happened, which was today at 9. Oh, I need to go to the 5 minute maybe. Yeah, here it is. No, that's not it. So let's look at the time because I'm replaying it back of when it happened. 9:39. So at, let's do 1 minute. 9:39. Boom, boom, boom. 9:39. Wonderful. The fair value gap had taken place. I don't draw those same drawings typically on here. This is just for execution, but this top step also has its own built-in calendar. And the reason why I still say you should get TradingView because you may end up using your own money and trading somewhere else. And so TradingView is a central spot. You can even, which I explained in another video somewhere, you can even trade. You can enter into trades down here. I guess it won't show it. I don't know. Oh, trading panel. Oh, I have to exit replay mode. There are a bunch of other brokers in this space down here under trading panel that you can trade with. So I wouldn't say, well, I'm going to save money and not use this account and I'm just going to focus on Top Step. Well, tomorrow, if you're not interested in using Top Step or you want to use your money or you want to trade Forex, this is not going to work for you. So that's why I still say get your trading view and then use Forex for your entry. So yes, Forex has its own platform. It's in real time. So the same time that price is moving on TradingView is the same time it's moving here. All you're doing on Top Step is entering into your trade. So once this candle has closed out, 60 seconds have hit. I now enter in, as soon as I'm counting down, and I can see the same countdown on here, I enter into my position. So I enter into 3 contracts. Now, when it says 5 contracts max on that platform that we saw early on the dashboard somewhere, it means, yeah, here, 5 contracts. What it's looking at is the ES itself, S&P, there's a mini and a micro. So ES is the mini, which is the big one, meaning that price moves at makes bigger moves. You get more money for your buck, but you also lose more because it's a lot bigger. Then you have the MES, which is the micro. So on this, you can do a max of 5. Because it's micro, it's smaller, the money doesn't move as crazy for you. It's more controllable, especially if you're new. If you're on ES, I've tested this out, you can't do more than 3. So let's say I'm on ES, I'm confident this price has hit where it needs to. It's also, what I didn't write on here, it's also shown a break of structure, meaning it's moved in a direction that clearly tells me it's going down. And for me, I look to see where the last time the price was moving in a downward direction on the prices, and then I look to see if this new direction takes out that direction, which basically that's what it is. Change of direction means the price was going up, now it's clearly going down. Since it's going down, I can say for sure it's going down. That's my first confirmation. And then when I create this fair value gap, great. Then I now look for price to enter in. When it does, I now take my position. So I enter into 3 contracts and I hit sell because in my drawing I expect price to go down to hit this take, which is why I'm calling it take profit, but it's also a key level because this is the previous Asia low, the lowest point that Asia was before London session took over. So I go over here, I write the number of contracts, I hit sell, and I wait for price to do what it does. This is on the 1 minute. Price now hits this key level point, and then I hit close position and I'm out. There are a little bit more intricacies into it, but this is the simplest way. This is the technique that I use for it. So let me go back to my list that I was making if anyone is writing notes. Wherever it is. Yep. Maybe all of this is just too big. I should probably reduce the size. Okay. So first I look at the news to see if there's anything I need to avoid, any time frame that I need not to trade in. Then I mark the sessions that I have, which we did. Red lines are Asian session, blue lines are London session, dark black lines are the previous day session, so the New York session essentially for the previous day. Then I mark my highs and lows. Oh yeah, that's what I mark. Then I look for draws on liquidity. So I look for where price had gone up but decided to turn back down, or price had gone down but it made this move up, and I marked those prices. I don't know why I didn't mark this one. This is a good one. As a draw on liquidity, meaning I look for these points to let me know that price may want to go back to that area, because price again is a magnet. It's going to be drawn by its previous placement, but it's going to be drawn to a certain point. And so these draws on liquidity let me know that price may end up wanting to come back to these particular significant points, to these key levels. So I put all those down. Then I go to the 5-minute candle and I look for a bias. Like, am I based on what Asian session did, London session did, and the previous day sessions did? Am I expecting candles or price to go up for me during this session or down for me? And for me in this session, in this particular case, I expected price to go up. But what happened was, what I need to put on here actually, up or down. Then I look for a change in direction. But that doesn't always happen. It just depends on what you're looking at. So for me, I was expecting price to keep going up. So if I was expecting price to keep going up, I didn't need to look for change of direction, because the change of direction happened in the London session. That was the change of direction, aka that was the manipulation, aka that was the reversal, because price was going down. And here in the London session, price decided to reverse up. So the change of direction took place in the pre-session, or in the London session, and I don't trade until New York. So once New York happened, I was expecting this continuation to continue, but price decided to reverse. And that makes sense, because this is a key level, this Asian session, and this is a key level as a previous day low. So it's okay if price felt gravitated enough that, hey, I've grabbed what I needed to, I feel magnetized to these prices long enough, I'm ready to come back down. And if it does that, then I look for a break of structure, or excuse me, a change of direction, which it did. It changed its character and started going back down. So let's see, we can look for 5-minute candle bias or down. Then we look for, look for a change of direction if needed. And then we had to change the direction here, so I drew the fair value gap. And then on the 1 minute, I looked for sniper entry, which is, I looked for, sniper entry, look for fair value gap to be filled and closed out of. And once I did, then I entered into my trade, enter trade, aim for key level, take profit. And that's pretty much it. It's one step that I use, which is the fair value gap. Other things are how you set up to get into the price. But there's, it's to me, it's pretty simple. Once you practice it enough, once you practice it enough, looking for Asian market, drawing these lines, you have to draw these lines. To me, in this strategy, there are other strategies where you don't have to do this, you just do other things, which is fine. But in this particular strategy, you have to go through these steps. You have to demarcate important sessions. You have to see what price has done in those previous sessions to determine what you're going to do in the new sessions, and then you look for confirmation. Did price reverse and manipulate in the right direction? Was there a change of direction? Was there a fair value gap? And if that fair value gap was drawn, did it honor and stay? Did it get respected and show you that it's going to go in the right direction? And all those things took place. Now, let's say you're trading in this session, London session, and you want to use the same strategy. That's cool. So in this session, you're going to wait for liquidity, because you always wait. Did I not put that on here? Yeah. Somehow I need to write it down. Look for bias up, then look for change of direction if needed. Basically, if needed, you're looking for liquidity to tell you what direction you're going. So for us, when I looked at this chart this morning, when I traded, when I saw that this key level, which was like a draw on liquidity, was reversed on, because this has already been taken out, I expected price to keep going upward. But then I see this new draw on liquidity. So you're looking for where price has taken out a key level to see if it's going to reverse. That's the whole goal. These are considered draws on liquidity. These are considered, some people consider them support and resistance. I don't really trade in that regard for futures. But I look to see price to be drawn to these key levels and do something here. I don't expect it to just be drawn and keep going down. No, because these are such important lines. These lines are not just for decoration. Price is drawn to it for a reason, and it does something there. It's active. So if you want to trade London session and you don't know if you're going to go up or not, but you see this is Asian session, I would wait. I'd say, let me see what London does. Does London come down and take out this Asia? Does it interact with Asia low, or does it interact with Asia high? Because again, Asia session is kind of a consolidating session. Sometimes it will interact with the previous day's high or low price, but really ultimately it's an accumulation session. It just is just stagnant in a sense. That's why a lot of traders don't trade Asia session for the most part. But London is where you see the manipulation. London is where things get active. So you're gonna look. So I see price in London at 3:30 a.m. takes out this Asia low. So in my mind, because I know this is an Asian low, I expect price to reverse up. So I'm waiting for that reversal. I'm waiting for that change of direction to take place. I'm waiting for price to tell me, yeah, we're definitely going up. So here, price has this big candle and it forms a fair value gap. But I haven't seen an official change of direction yet. The last time I saw an up candle going in here, actually I think I see this is an up candle, and then I see a bigger one going up. So this is the change of direction because it closes above the previous low, or previous, yeah, it closes above the previous high. So this fair value gap was drawn. I see that price taps into it and closes out. So I would, realistically, if I was trading this, I would have entered into this trade. I would have set my stop loss somewhere below this. Being that's S&P, I still feel like with an S&P, it's not just below that fair value gap, especially because the fair value gap is not that big. It's not as big as this one. So my stop loss is not going to be that tight. So let's say price entered in on this candle. So the next candle, I'm ready to. So for me, I'm going to wait for the next swing low, which is right here, which is the last time price was kind of low before it shot up into this high. And I'm going to aim for Asia high. And that's it. And I'm going to take my profits as soon as I hit this high. So I would have entered into this trade at, what time is this? 4:15 a.m. And I would have gotten out of this trade at 8:20. And depending on how much you would have put into this trade, would have been a lot. Now, if you weren't comfortable hitting this because you're like, well, that's such a big gap, or I don't have time, you put in smaller time frames, smaller draws to be your target. This could be your target. So once price hit up here, that could have been your target. Because what you're doing is you're looking to the left to see where you've seen, where you've seen significant pulls. So this could have been your next target. This could have been your next target. Again, I'm looking at an upward candle, downward candle, highest point between the two. You could have targeted 1, 2, 3, 4 times, 5 times, 6 times before you said, okay, you know what, I don't know, I don't think it's gonna go up here, or hey, I can only go up here, so I'm just gonna, that's it, I'm good. And that would have been a nice trade actually. I could have actually entered into that trade, but I just don't focus on London all that much. That would have been a great trade. And you would have used the same instructions as we did before. We drew our lines. We looked for a price to manipulate a key level. It showed reversal. There was a break of structure here. We drew a fair value gap. We waited for the price to tap in and tap out. We entered into this trade. We set our stop loss below swing low, and we aimed for the next key levels up here. This is a big key level. Asia high is a big key level, but there are draws equally on liquidity, smaller ones here that we can see on a 5-minute. This key level was drawn on a 30-minute, 1 hour, 4 hour. So yeah, yay. So I hope this was kind of helpful. I apologize for the technical difficulties, but it is Christmas Eve. Or no, it's not Christmas Eve. What is this? It's New Year's Eve, and I hope you found this information kind of helpful. Screenshot this if you can. Wait, let me make it right. Look at news, mark the sessions, mark highs and lows. Look for draws on liquidity on the 4 and 1 hour. Do your 5-minute candles. Look for bias going up or down. Yay. For bias going up or down. Look for change of direction if needed. You're looking for liquidity to tell you what direction you're going. And then draw your 5-minute candle. Once you know what direction you're going, right, up or down. Once you know what direction you are going, now you're going to look for fair value gap. Then you're going to drop down to the 1 minute. Look for a sniper entry, which is a more specific targeted points, because you're not trying to be, this is a day trading. I'm not doing swing trading where I'm trying to look for big moves in a 4 hour and a daily chart. I'm looking at the 1 minute, 5 minute for my entries and confirmation. So 1 minute, look for sniper entry, look for fair value gap to be filled and closed out of, and then I can enter my trade, aim for key levels, and take my profit. So screenshot that if it's beneficial to you. I hope this was helpful. I hope to do more of these, get more, hopefully, concise with time and not waste too much time explaining it. But I hope this was helpful, and we'll see you next time, and Happy New Year.